Hi, I'm Adam and welcome to my brand new YouTube channel called Your Average Investor. I started my own investing journey a little under a year ago now, and what I would have found really useful when I was first starting out was a YouTube channel or a website which took you through a step-by-step process of how to start investing. Things like how to set up an account, what's the best account, how do you invest in stocks, ETFs and indexes, and then followed that over a period of time so I could get a really good in-depth understanding of investing before I actually did it myself. Now, there's lots of stuff out there online that does this. However, most of the portfolios and the people that you see doing this have massive amounts of money invested. And for you and me, that's not realistic. So the channel Your Average Investor is designed to follow a portfolio which is realistic to both you and me. And hopefully that will help you gain the confidence and the understanding to be able to go out there and start investing for your own future. Quite a lot of the stuff that you see on YouTube and on the internet is from America or outside the UK. Now, as a UK investor, it is interesting to see what goes on in other countries, but it's really important to get an understanding of how it works in the United Kingdom. Also, it's a way for me myself to document my own progress so that I can look back on it in years to come and see where I started and where I eventually end up. So, without further ado, let's hop into my portfolio, look at where I'm investing, how I've done so far over the past year with everything that's been going on, and talk a little bit about why I've invested in what I've invested in, and look at where my portfolio is at. Let's have a look. So, here we are inside my Vanguard account. Before I started investing, I did lots of research as to where was the best place to put my money. There's Vanguard, there's Hargreaves and Lansdown, Trading 212 and Free Trade, just to name a few. Eventually, I decided upon Vanguard for a number of reasons. Vanguard is now one of the largest international investment providers, with a total assets under management of $6.2 trillion. Over this time, it's become well renowned and is now one of the most trustworthy companies within the field. And because of this, I feel safe investing my money through them on their platform. The key reason that, in my opinion, sets Vanguard above anyone else within the investment field is the low fees, both account fees and ongoing charge fees, for each of their individual investments. For anyone who's looked into investing before, you'll know that fees have a massive impact on the overall value of your portfolio, especially if you're planning on investing for the long to medium term. Because Vanguard has such low fees, this will have a minimal impact on the overall value of my portfolio in years to come. Another reason for me choosing Vanguard was because of the range of ETFs and funds that are available on the platform, which is ideal for a starter and a passive investor, which I would class myself as. While Vanguard doesn't offer the capability to invest in individual stocks, when I started out my investing journey, this wasn't something that I was interested in. As I've already said, ETFs I saw as the best way for me to dip my toe into the stock market, gain some confidence, and get a feel for how the markets work. There are two ways to make that initial investment into the Vanguard platform. The first of these ways is to invest an initial £500 lump sum into the chosen fund or index of your choice. The second method is to commit to a monthly £100 instalment investment into the account. I decided to save up the £500 and jump in at once. When starting investing, it's really important to have a clear strategy before you start regarding how often you'll invest, how much you're going to invest, whether you'll be an active or a passive investor, and what kind of areas you think are best to invest for yourself. From my own research, I decided that passive investing was the best approach for me to take, rather than a more active approach to try and beat the market. I also decided that pound cost averaging over the long term would see me make greater gains. Finally, I decided to adopt a dividend reinvestment strategy to really boost the investment income that I could expect to make. While I decided this is the best approach for me, it's really important to find out what's the best approach for you. And so don't take my advice, go out there, look online, try and find some information, and decide what's the best way for you to start investing in the stock market. It's also really important to consider how long it's going to be until you need the money that you're investing, and this is known as an investment horizon. It's commonly said that if you need the money within the next 10 years, then you shouldn't be investing. And the reason for this is if the stock market does take a dip, there's a market correction or a market crash, there's every chance that the money won't have recovered in time for you to be able to draw it out within that 10-year period. My own investment horizon is quite a way in the future. Like I say, I started last year when I was 27, I'm 28 now, and I'm not expecting to need this money for quite some time. What this means is I can be a little more aggressive with my investment decisions, investing in predominantly equities rather than bonds. When logging into your Vanguard account, this is the landing screen that you'll see. This basically gives you an overview of your account. It shows you your total value of your account at the top, which you can see that are labelled My ISA Value. You can see the largest investment that you currently possess within investments, and obviously with each of these different boxes, you can really drill down and get lots more information on the specifics by clicking on the tabs below. As you can see, my rate of return is a little over -4%. Now, this was as high as +10% at one point, but obviously with everything going on in the past few months, it did crash and fall quite dramatically. It got down as low as -27% at one point, which as a new investor took a bit of time to get used to and was slightly worrying, but it slowly progressed and kind of improved again over the last few weeks, which is good to see. I think the key thing there really is just not to panic when it does fall down. As I say, if your investment horizon is a long way in the future, these bumps and dips in the stock market won't affect your overall value too much when you do come to withdraw in the future. Also on this front page, you can see how much of my ISA allowance I've got left. Now, I decided to invest through an ISA, a stocks and shares ISA, due to the tax relief and the dividend tax relief that you get through using that wrapper. That's something that I can talk about again in videos to come. If we drill down into my investment holdings a little bit more, you can see that I'm currently invested in 5 main ETFs and blended funds. So I've got the Life Strategy 100, which is essentially 100% equity, and this is made up of lots of different ETFs and indexes. So it's massively diversified, and this was the first fund that I started to invest in for the reason of diversification. You can also see that I'm invested in the S&P 500, the FTSE 100, the FTSE Emerging Markets, and the FTSE Developed Asia without Japan involved. As you can see, each of these different funds has got varying rates of return at the moment, and also a varying amount of total weight and current value. In future videos, I'll spend a little bit of time talking about each of these individual funds that I'm invested in, and we can look at the performance of each of these funds, we can look at some of the individual stocks that each of these funds have included within them, and we can have a look at the distributions and the fees that you have to pay for them as well, because I think that's really the information that's helpful when you're starting out investing. By tapping the Performance tab in the middle of the screen, you can see a detailed breakdown of the contributions and the current value of the investment. As you can see, I've currently invested £2,760 since opening my account, and the account's currently worth £2,700, which means a small loss of £59. However, that is to be expected with the current investment climate. You can also alter the time frame which you look at by using the date tabs on screen. By scrolling down, you can find this graph which depicts the growth of your investment over time. Throughout 2019, you can see that my investment steadily grew because of my continual monthly investment, my dividend reinvestment strategy, and capital growth. In March 2020, my portfolio took a hit due to the global pandemic. However, I continually invested throughout this time, so the graph doesn't show the true nature of the decline in value. Since that point, the stock market has rallied somewhat, and you can see that from the growth in the value of my investment, with my rate of return recovering from -27% back to -4%. We can then further break this down by looking at my monthly contributions to my investment portfolio. You can see each month how much I've invested, the beginning balance and the ending balance. And this is one of the things that I really like about the Vanguard portfolio and the Vanguard platform. It's really easy to break down and look at where you're at, look at the growth, look at your fees, and look at any dividend income that you're making. So you can see over the last few months I've invested 590 and 444 since everything's been reduced down. But throughout the year you can see 75, 80, 90, 65. I'm trying to average around £75 to £100 invested a month, and obviously this depends greatly on the month. It might seem like a small amount to some people out there, but by continually doing this for the short, medium and long term, I hope to be able to grow this investment account into quite a sizable pot. One of the benefits of investing in ETFs is that you still gain a dividend if it's an income fund. Now there's two different types of fund. You can have income or accumulation. Again, this is something that I'll explain in a future video. In essence, if it's an income fund, you'll gain a dividend from them, usually quarterly, some of them are monthly. So let's take a look at how much I've expected or how much income I've had from dividends this year. So we'll click on calculations, And then down here on the right hand side, you can see the Your Investments Return section. So you can see your current investment value gained and lost, you can see your gross interest, and you can see your dividends. So this year I've made £19.42 in dividends from investing £2,760. Now, with the current climate, keeping £2,760 in a saving account wouldn't give you that much interest. So by keeping that money in here, whilst at the moment I've made a small loss, I've still managed to maintain that £19.42 in dividends, which, as I say, is more than I could have expected from putting the same amount of money into a bank account. Equally, I said that I invested in Vanguard and on the Vanguard platform due to the low fees and low charges. As you can see, I've only paid £1.41 in charges this year, which is amazing when thinking about and when comparing that to the amount of fees I could have paid on other platforms. By clicking on the Insight tab at the top, you can further break down your investment into product type, geographical region, and industry type. Presently, you can see I've got 39% of my money in a blended fund, and this is the Vanguard Life Strategy 100% equity. I've got 61% of my money in equities, which is the FTSE 100 tracker, the S&P 500 tracker, the emerging market tracker, and the FTSE Asia ex-Japan tracker. By scrolling down, you can see the geographical regions which I'm invested in. Finally, by scrolling down to the bottom of the page, you can see where my top 10 investments are, and then the sector allocation of those investments. So you can see they're broken down really nicely so you can get a really detailed understanding of your investment, of your allocations, and if that meets your investment strategy. So that's just a quick look at my own investment portfolio, almost a year into my journey. Like I say, it's not a massive portfolio, but hopefully it's something that you can relate to yourself. These videos should be every week or so, and they're an opportunity for me to track my own progress and for you to see how a normal portfolio will develop, with numbers that I said are probably relatable to most of us. Like you saw, I'm not investing a massive amount each month. I'm aiming for around £75 to £100. However, if I can do any more, then I will, because the more you can invest at the beginning, the greater those rewards will be at the end. If you found this video useful or you've got any questions, please feel free to drop a comment below. It will really help me out in knowing what to do in future videos. So, like I say, this is the first video for the channel. Today we've looked at my portfolio, we've looked a little bit about my investing strategy, and I've told you a little bit about myself. Hopefully in the coming weeks you'll be able to come back here and watch my portfolio grow, and this will give you the encouragement and the confidence that you need to be able to go out there and start investing yourself. I'll see you next time.